Hey, good morning, everyone. Marty Missouri here. It is Friday, the 23rd of September, 2022. So I'm going to split up the usual Friday or Saturday video. Lately, I've been doing a lot of the macro update with a stock market snapshot at the end. Today, I'm going to just jump in right now and do the stock market snapshot because of all that's going on, and then I'll circle back later today or over the weekend with a macro update. Whether or not I add something to that on the market, we'll see. It depends on kind of how it plays out today. So in this morning's morning note, if you read that, you notice that I shared this 60-minute graph that I updated last night. And I had these two arrows, right? I had an upside target of 4,000 and a downside target of 3,650. And at the time, we had what could ultimately be bullish divergences on both the MACD and the RSI. And I pointed those to, potential positives. And, you could right now, yeah, sure, there's very definitely, wedge pattern that you would coordinate with those, except you no longer really have those. You burned right through the potential divergence, so you don't have that positive. That's confirmation of this bear flag pattern right here. And then still positive in terms of the RSI look, and we're getting into oversold territory on this hourly chart, and I'll show you here on the daily as well. So 3650, no magic other than this bear flag is right where that would target. Again, on the morning note, I shared a paragraph from our consultants on the options dealer side who tell us what's going on under the surface. And they point to 3600 as support, also 4000 as potential upside resistance. And I still mean it, folks. So we could make probably a 50-50 case. I'm going to talk in a minute about other things under the surface that you could get short-term bullish about. But again, as I said on the morning note, we don't have kind of the confluence right here that has us, confident like we were, in other parts during this bear market that we would get a nice rally. I think there's no doubt we will. It'll either be a bear market rally or we'll begin to rally off the bottom into the next bull market. But along the way, these bear market rallies are interesting. So yeah, right now the bear pattern is playing out. We'll see if we get to 3650. Right now we're at 3682. We've been in the 3670s coming off of that a little bit on the daily chart. The bear flag that we pointed to, not as convincing a bear flag pattern, but boy, it sure did play out, right? That we actually exceeded the target on the bear flag that we had here on the daily chart. That would be your flagpole target there. We burned through anything that would be positive on the momentum oscillators, but we are definitely in oversold territory on the RSI, right? And here's what that has looked like, so far this year, right? There, we got there virtually, and we got this, right? We got there here, right to that green line, right there. Came up, came down, and then we got a little bit of a rally there. Got it here, got these counter trend rallies. That was a very classic looking bear flag that actually didn't play out. Obviously some news came in and the market rallied out of that, but then before long, just a few days, it rolled back over after, I know we painted pictures all over this at the time, after that reversal pattern right in there. So yeah, we're still very much in this, living in a sell signal on the MACD, getting close to that 3650, getting very close to the bottom that people think the market may bounce off of. If it gets tested, that's 3644-ish. Our target remains 3,500 right here. We notice Wall Street, everybody seems to be ratcheting down their target. One summary of an analysis I read yesterday, I forget who the house was, but it was like 4,800 year-end target is now a 3,600 year-end target. So folks, this market is all over the place. Volatility is enormous, even though the VIX is only at 29, and I say only, although that's high by recent history, but you'd think that you'd get something bigger to the upside. So there's a lot of action in the options pit that's impacting the price of volatility these days. I'm going to read from a comment, my reply to a commenter on the blog this morning, and just summarize kind of the short-term bull case and bear case, and then I'll let you go. Really thoughtful, astute client here, really intelligent guy, thinks a lot about the markets, comes up with good questions, good assessments, independent in his own opinions and so forth. So anyway, Sam said this morning to me, thanks for the updates. The S&P is getting closer to 3650 this morning. That's what I referenced in the written blog. In terms of market perspectives, October CPI index, upcoming earnings, what is your opinion for everything the month of October? And of course, I'm going to say difficult to call right here. Rising CPI inflation, I believe, is fully priced in the short view, in the short term. Earnings disappointments are beginning to be priced in, of course, because the market's been coming down a noticeable amount, right? Between here and there, like I said above, 50-50. Here's a short-term bullish case from a chat with Nick this morning. Now, I'm making no recommendations here, folks. Big sell-off this month means big rebalancing, these automatic rebalancing programs into stocks at the end of the month. Plus, again, lots of put buying and therefore dealer hedging to be unwound. We're talking about shorting, and you got to cover your shorts. Huge net short in the futures market, and we may look at that at the next video. We'll see. Elevated VIX, weak sentiment, etc., to spark a rally. So that is the makings, no ifs, ands, or buts about it, over a potentially pretty strong rally over the next week. However, in the meantime, but make no mistake, and this is part of the bearish case, at this moment there's a lot of put option activity out there, so it feeds the bullish and the bearish case, that dealers are hedging. It's going on, a lot of that activity. There's a very big collar managed by JP Morgan where the market is approaching the put strike. The dynamics there will force the dealers on the other side of that trade to hedge that exposure by shorting the S&P, adding more pain potentially. Now, and that could be dramatic. A lot of that's going on today, I suspect, at least the hedging that's going on, which is the shorting right here. All that shorting, however, will one day have to be covered, of course, and that a lot of that could happen in the next week. So, folks, I'm not saying that I'm bullish, right, and that you should back up the truck for a 1 week trade on stocks. But there is really a case to be made. And when I can't find very many bulls out there who I respect, the people I respect are getting very, very bearish as well, that actually feeds the short-term bull case as well, for what it's worth. Okay, there is one more thing I want to show you because I promised it on yesterday morning's blog, and that's the dollar. Here's that dollar chart. We have an upward wedge that we're blowing out of, breaking above that to the upside, and buy signal on the MACD, blowing through this divergence, although it's still there. And then overbought here on the RSI. Still have to call that a bullish divergence there. Folks, the dollar is just absolutely been a wrecking ball. We're seeing it over and over again. And I showed you this morning, actually, it wasn't yesterday, it was this morning, I showed you the negative correlation between dollar and stocks. So this is not going to go on forever. We think we have a good fundamental case that over the next few years, we're going to actually see the dollar trend lower, which I keep saying bodes very well for how we're allocating assets right now. In the near term, if the dollar, Japan gets even more aggressive and so forth, they get aggressive with rates in Europe and so on. If the dollar were to begin to roll over and break through there, I think it could be precipitous. There's tremendous long interest in the dollar right here. And that could be bullish for stocks. I suspect it'd be very bullish for our commodities exposure. So the whole world is bullish the dollar. I understand that. They have justification for that. I'm going to stop here in a second, so I won't belabor this, but maybe we'll on another presentation. But if you read the quote this morning in the morning note, you'll see that there is more to currencies than just interest rate differentials. You wouldn't think so necessarily based on how things are trading and what you're hearing from the currency experts largely these days, or just from traders in general. But make no mistake, folks, there is. And I think some of that there is what we have in store over the years to come, months and years to come, probably. I'll leave it there. Thank you, as always, for watching and listening. And I'll be back within the next 24 hours with a macro update. Take care. Bye-bye.